Hello friends, today let us discuss about investments. Investments is mainly required today because life itself is uncertain. Today inflation is blown up so much that a common man finds very difficult to sustain in daily life. So in such case, normally if we save for today, tomorrow is better. If we save for tomorrow, day after tomorrow becomes better. So in such case, normally let us try to understand and analyze what investments are. See, today if you want to again develop certain things, normally see we need to again save. Okay, if we earn say 3,000 rupees per month, if we start saving 1,000 rupees per month, so that will automatically become 12,000 at the end of the year. So what is important is normally understand what is investment. Sacrificing present resources for future benefit is called as investment. Okay, so investment can be made in any avenues. It can be invested today in gold, you can invest in insurance, you can invest in mutual funds, you can invest in bank deposits, you can also invest in term deposits also. So but what is required is normally again analyze which investment suits you, which investment is better, which investment is right, which investment is suitable depending on your profile as well as commitments. So what is important is normally is a common man has got the right to invest because everybody wants to live, everybody wants to sustain, everybody wants to again meet their commitments on time. So in such case, normally what is important is, see, a small bank deposit is not a problem for even a small man today. So in such case, normally again investment should start from a starting point. See, realize that for everything there is a starting point. So start investing from a small bank deposit. It may not cost you much, it is independent as well as it is not having any risks. It is not linked to any market. It doesn't have any exposure outside. So what is required is normally again just you have to see that what is the growth rate, what is the time required, and when your commitment has to be met in the future. Depending on that, normally you have to start investing. Now let us see that normally again what are the different types of investments available today. See, investments basically are of three types. The first one is short-term investment. A short-term investment is any investment that is made within 1 year. So for a short period, that is called as short-term investment. For example, you may go for 1 year RD, recurring deposit. In that recurring deposit, what you do is you invest a particular sum of amount for a particular interval, and then at the maturity period, that is at the end of the year, you will get the principal amount plus interest. That is important. So what happens is there is a growth. See, yesterday was bad, but today is good. Tomorrow we expect certainly better than today. So in such case, normally again this is the starting point of investment. But suppose if your income grows, then what happens is you have to maintain that income level, you have to maintain that standard level, you have to again maintain your status quo in the society. So what is required to be done there is normally again you can select some other avenue of investment. Say insurance is required. Why insurance is required? Because today we know that life is uncertain, plus we want to take care of our dependents for that reason. Then what is required is normally we have got certain long-term commitments also. Like, see, in future your small children may go for higher education tomorrow, or the unexpected marriage may come up, or today we know that education itself is a costly commodity. So to pursue higher education, we may have a long-term commitment. In such case, normally what is required is, so to meet up this, we have to again invest from today itself, being responsible, being ethical, being committed persons. So for that reason, normally we can invest in other avenues also. Okay, so one part this is there with respect to short-term investments. Then look at medium-term investment. Any investment which you make for a considerable period of say 3 to 5 years is called as medium-term investment. Medium-term investment is suitable for any common man, any type of person who earn a decent salary every month, or he can be self-employed also. So in such case, normally again, see, this medium-term investment is done with an idea of maximizing your savings, maximizing your returns potential, as well as suppose if you have got a commitment after say 3 to 5 years which has to be met. In such case, ideal investment suitable for you is medium term investment. Example for medium term investments could be your say any term deposit which is made for a period of 3 years, term deposit, as well as any insurance policy which is purchased which matures on 3 years or 5 years. Or it can also be a national savings certificate where you can also see that maturity meets on 3 to 5 years. Likewise, The third type of investment which we discuss is long-term investments. Long-term investments are generally for a period of above 5 years. So what we expect the return is after long term itself. The purpose of making this long-term investment is to meet up the commitments in the future, forthcoming future. It can be after say 10 years also, it can be after 20 years also, or we may expect some lump sum amount which has to be generated after 10 years, 20 years, etc. So in such case, we generally go for long-term investments. Long-term investments are ideal for the persons who have got definite sustainability. Sustainability means those people who can sustain themselves, survive themselves, meet up the commitments for the short term, meet up other things also. So who are not dependent only on these investments. Rather, their idea is one side that amount whatever is invested that should grow, plus on the other side normally they should also make sure that normally again their amount is in their hands itself. That is there. Best example for long term investment is investment made in real estates, investment made in gold, investment made in case of properties, okay, any unmovable properties, whatever is there. So that is the best example for long term investments. So basically what happens is long term investment can also serve your needs also, plus needs of your dependents. So in such case what is happening is normally one side you grow as well as you make your nearest ones as well as dearest ones to grow. That is required. So in such case long term investment is ideal. Now let us discuss what is important when you make an investment. See, as common human beings we need to understand two things. I will put up like this. It is two R's, risk and returns. Basically what happens is normally again the rule goes like this: higher the risk, higher is the returns; lower the risk, lower is the returns. But is it necessary to consider it every time? It is not necessary to consider this every time, because many times normally our commitments may be immediate. In such case normally again we are not here ready to take risks, rather we want stability in returns. In such case normally we have to think only the guaranteed returns. Ideal suitable investment at this point of time is bank deposit and nothing else. Whereas if you want normally returns as well as the risk, in such case normally investors can invest in capital markets, stock markets, commodity markets, gold markets, or any markets where they get their calculated returns. That is there. So many times you can see that venture capitalists investing in normally the businesses which gives them optimum potentials. Okay, so bank deposit will get only guaranteed returns, whereas when we invest in the case of any venture which is going to fetch say 3 times returns in another 2 years or 5 times returns in another 2 years, so in such case normally we can pick up such type of investments also. Today we can find that normally investment can also be done in the form of partnerships also. So nearest city available for us is Mangalore. We can find that, see, today malls are coming up. Today we can also find that commercial complexes are coming up where investment is made by partners. The partners can be from domestic country itself, that is our country itself, or they can also be from normally say overseas also. There are investors investing from overseas. So in such case what happens is considerably their investment will grow, plus we can also find that their assets will also grow. Okay, so this is one thing which we need to know there. Okay, so this is about the investments idea. Now let us see what are the different types of investors available in the market. Investors are generally three types basically. The first one, whom we call it as conservative investors. Conservative investors are those who care for safety of their returns, safety of their principal amount. These people never risk more. These people never be ready to again take up any risk. Rather, what is important for them is saving their principal amount. So in such case normally again we can find that these people never invest much in insurance, these people never invest much in properties, gold, etc., where market linkage is there. Rather these people believe only in bank deposits, because the perception of these investors is that bank will never close down, bank will never shut down its operations, bank will never cheat anyone. Rather we can find that the guaranteed returns is given to you at the time of maturity of investments. So this is what is something about conservative investors. So second type of investors whom we come across is called as moderate investors. Moderate investors are those who are like, say, the one side they want risk, other side they want returns also. So these people will never make an investment in one particular portfolio of asset itself. Rather what happens is these people invest partly in gold, partly in real estate, partly in insurance, partly in bank deposits. So which means that these people will take a portfolio in such a way that there is equal amount of risk as well as returns available. So this is what is the characteristics of this particular investors. Third type of investors are called as aggressive investors. Aggressive investors invest more, they take risks more, plus they can also find that they want only returns with risk. So best example for aggressive investors are venture capitalists. Okay, today we can find that online investors, these are normally venture capitalists. Okay, so this is something on the investments what we want to learn. Okay, to sum up what we have learned for today is normally what is investment, why investment is required, what are the basic purpose of investment, and then what is important when we again consider any investments, whom we have to realize, what we have to realize, what we have to consider, and then what is happening is, suppose if we don't analyze the investments, so nobody wants to make losses, rather we can find that everybody wants to maximize their funds, plus everybody wants to be happy. So to be happy, what is required is plan and then invest, consult and then invest, analyze and then invest. So don't depend on only one, rather you question yourself, you question others, you take expert opinion and then consider your investment. This is what I just wanted to educate you today. Okay, thank you very much. So if any of the things are there, so any of the queries are there, you can approach in the next session.